There we go. Welcome. Hey, welcome back to another course member, or not, course, geez, I need to wake up. Welcome back to another stock market open live stream. Now we actually have audio. Welcome on in, everyone. So today we've got GDP coming out. So we've got the second read of GDP. GDP comes out in 3 reads. You have an initial, a secondary, and a final read. You've got GDP annualized expected to come in at 1.3%, personal consumption 2.2, GDP price looking at 3.1, and PCE quarter over quarter we're looking at 3.7. So we've got a couple inflationary numbers that come out, although these are secondary reads, so this shouldn't be that big of a deal, but it is if there's a big shift or revision. Initial claims, we're looking for 217. Those will be coming out within the next minute. And then we'll also be getting some wholesale inventories as well as retail inventories and pending home sales. So we're getting a good little data drop here within the next 30 seconds. We'll be able to go through all of that and analyze exactly what's going on. There we go. Okay, yeah, and May 31st. There we go. Okay, and then remember, the next coupon code on the programs on building your wealth expires this Friday, May 31st at 11:59 p.m. Okay, here we go. Data. Bitcoin's at 68,000. Let's see what happens as the data actually comes out. Wholesale inventories come in at 0.2 versus the 0.1, a little bit bigger than expected. Initial claims basically at expectations. GDP annualized 1.3, that's at expectation. Consumption a little lower, 2 versus 2.2. GDP price comes in at 3 versus 3.1, that's good. And core PCE price index comes in at 3.6 versus 3.7, that's good. So we just got a little less inflation, and basically the same sort of annualized GDP read as Q1, roughly 1.3 to 1.6. But again, that was heavily weighted down by inventories and exports the last time. And then here we did have, it looks like wholesale inventories on a month-over-month basis in the second quarter. So in April, actually popped up again a little bit. So it sort of solves some of this issue. Overall, I think this data drop's actually pretty good. You've really got nothing scary on claims, so no signs of issues on unemployment claims, although if we really saw something there, it'd probably be too late. But you're not even really moving off of expectation, continuing expectations. Continuing claims were revised down 7,000 for the prior week, and they came in 5,000 short this week. And still don't have the pending, the pending home sales numbers. Those come out at 7 a.m. Yeah, GDP price levels there, 0.1 lower than expected, but otherwise this is a pretty bang-on report. So we can jump in here, and we could get a little bit of a glance at how the Qs are reacting here. Slight little move up on Qs, and you get about $70 or so that came up there. Actually, it had almost $250 that ran up there on BTC. Although that did reverse pretty darn quickly. So I don't think for whatever reason the market is so enthusiastic about this data. Probably because frankly it's very much mostly along expectations here. So then what we're gonna do is let's take a peek. So these are the this is Bitcoin. Here are the Qs. 0.14. So trying to go positive. Then of course we've got UiPath. Yesterday we looked at their about 11% forecast miss. That came along with a C3AI expansion of their losses, expansion of their, reduction in their margin, and so basically less profitability, but they did beat expectations. So you've got about an 11.8% move up on C3AI. And then you've got Salesforce itself, which is sitting up, down 16.24%. These here really signaling some slowdown in the AI services side. AI services is a big deal. Somebody here says, what platform are you using? What platform do you trade on? This is called Webull. They're actually a sponsor of the channel too. You can go to metkevin.com/Webull, and they'll give you like 20 free stocks or whatever when you sign up. I think it used to be, I don't know if it's still the same promotion, but I think it used to be like get up to you know, $2,000 or $3,000 or whatever if you sign up. Could be less, but something, you know, is one of their promotions. Anyway, then we've got Donald Trump. His stock. We're moving. Jury took off yesterday after sending in a few notes for clarification on the instructions and a little bit of a repeat of testimony. This morning for Trump, we're expecting a repeat of that testimony. Basically, it's just a read off of the transcript, and that's expected to take about 30 minutes. I expect within the instructions or so, the jury will probably have about an hour of nonsense that they kind of have to go through, and then they'll be able to get back into deliberations. I personally think you want this to go, if you want to see Trump innocent, you want this to go as fast as possible. If this deliberation goes into next week, it's not, it's less good, but then again, you know, it could be that you have some people, that you have some form of divided jury, right? That's a possibility. So, but anyway, I wouldn't be surprised if we had some kind of verdict today. But then again, maybe that's already priced into DJT, so who knows? We'll see. Okay, Robinhood. So what do we have here? Down about 55 bips. Actually ran into the close yesterday, $3. Yesterday in the trading group, we had a, what's it called? We had a call option on this one. I think, what was the call on this one? Let me see. I was looking at this one yesterday and made some money on it, but the move into the close was remarkable. Let me see here. This one, the 21.5 option. So I was looking at the 21.5 option for like 24 cents or something like that. Yeah, it basically doubled into the close. It was remarkable. You got this really, really remarkable move on not only Hood right into the close. So some real enthusiasm here. Look at this, sort of like a double run into the close. But you had this same run here on Dell. Take a look at this. Dell right into the close. Usually that last hour of trade, I'm not the biggest fan of trading, but I thought this was really remarkable. Just the volume that came in. Look at that volume. This, to me, it felt a little bit like almost ETF buying, where you have like a bunch of ETFs that are like, oh yes, we are now going to add to our, ETFs Zadell. So we have more artificial intelligence. Okay. Well, that's cool, but Dell gets like 2% of their revenue from artificial intelligence, but whatever, I guess the stock can double on that. It's fine. It's not a bubble. At least that's what the comments say. So then Crown Electric's up 6. Faraday Futures bounces a little bit, but only about 3%. Palantir's actually up 2.7 this morning. That's pretty good. And Tesla's also up about 1.7 as they make some progress on filing registrations for their FSD licensing in China. But let me look at what's going on with Palantir. Palantir shares gain as Army contract win aids sales visibility. That's great. Plug Power, you're at 1.8. Upwork, 1.8. Nothing fancy here. Charge points over there. Enphase up another %. Although yesterday you were down about 2.85%. This morning you are up almost 2% there on Tesla. Looks like you're really trying to get to those 180s again. I've got lines for Tesla here at 179.67. You can see we've gotten rejected there a couple times already. And really the next stops are going to be in the lower 180s. So we'll take a look at that. Kubrov, maybe, I don't know, maybe your email went to spam or something like that, but what I would recommend you do is email staff@mekevin.com. That gets cleaned out every single day. In other words, everybody gets a response in there every single day. So if for some reason you didn't get a response, just shoot us an email at staff@mekevin.com. We'll make sure you're in. But really, you could also set yourself up with the trading alerts. Just make sure you watch the first lecture, like the very first lecture in the course. I think it's like lecture 1.0 or something, will help you get set up for those trading alerts. So you don't actually technically need to email us. if you just watch the first lecture. And I understand sometimes people join and they don't want to watch the first lecture. It's okay, but that should help you get set up automatically and yourself. But yeah, thanks for asking. We'll make sure you get taken care of today. So Workday down 20% in 1 week, says someone. Let me take a look. Workday Inc. Yeah, down 1% yesterday, another percent in the pre-market here, and yeah, you're right. So let's zoom out here. Let's take a look at Workday. We've got Workday. Let's see what news there is. How many hours of videos are in the lecture? It really depends on the course that you're in. I mean, like the 0 to Millionaire Real Estate Investing course is like 50 hours of real estate. Property management is with multiple people, and Lauren and Connie are in there, and it's up there. It's probably 20 to 30 is my guess, and I'm suspecting stocks and psychs somewhere around the 40 range if I had to guess off the top of my head. Maybe 30 to 40, but yeah, I'm not sure about that. But and then of course you got to factor in too all the course member live streams if you wanted sort of the archive of that. I mean, that's just like 4 years of live streams, but I don't generally well, the numbers I'm giving, I'm not adding that in. I'm not anticipating that to be included. And we sort of add content over time too to make sure it stays relevant. So what was Workday? Workday sunk on the 24th, so that was the end of last week, as much as 15%, worst day since February of 2016. And that's in part due to a $62 price target cut from $300 down to $238 at Macquarie, whatever. So some analysts cut. And yeah, that's it. Workday near-term subscription sales view hurt by slowing macro. But this is what you're seeing. You're hearing this from the software companies, is that basically software prices are coming down and signups are coming down. Workday subscription growth could slow to 16 to 17% in the next 12 months, roughly 210 basis points lower than their last calendar year. Its recent results highlighted increased difficulty closing larger deals, along with lower than expected headcount growth amongst customer renewals. Interesting. We expect this is likely due to increased economic and geopolitical uncertainty, especially in the Middle East, along with a reprioritization of tech budgets towards AI, hindering traditional software providers like Workday. I don't think it's just hindering traditional software providers. I think it's hurting all software providers, because you're getting just cheaper access to software. You're really what it is you're getting, I mean, I hate to use this word, but it's just like the easiest phrase to use. It's like you're democratizing software with AI. And so you're leading to this reduction in frankly, value or cost across the board for accessing software. I mean, you can have good custom software with a GPT for a lot of purposes that previously would have been very difficult or impossible for certainly a small or medium-sized business to create. So I find that very interesting. It's a good thing, but it's also weird because software has usually always maintained its profit margins. It's very hard for margins to compress on software unless you have a lot more competition. And a lot more competition, I think, is exactly what AI is creating, counter to a lot of the expectations folks had for artificial intelligence, that it would just lead to more profitability. It's actually leading to less. Now, it makes other non-software companies more, how should I say, open to being able to integrate AI, and they're beneficiaries of being more efficient as a result of that. But the software companies themselves are having more issues because of it. So something to pay attention to. Okie dokie then. Let's listen on here to the CNBCs.
Tomorrow morning, with PC prices coming out for April, we'll be telling the Fed will be watching that closely. I mean, this was marginally good news on prices. You saw the 0.10 downturn, but tomorrow's the big data release for the Fed. I mean, a lot of investors have 2 cuts still on the table for 2024. It's just happening later in the year. I think that's a reasonable point of view, but this is really a core PC story moving forward.
By the way, what's your forecast on that front?
For core PCE?
Yeah. No, core PCE, but cuts later in the year.
Because I'm bearish on the economy, I see the Fed cutting, but it won't be until December. Look, here's the problem with the soft landing scenario. If there's a soft landing, how does inflation get down close to 2%? Absent an exogenous increase in productivity growth. But if that was the case, if productivity were really surging and if there was that much potential output left, why has inflation shot up the last 4 months? So you really need a period that's going to maybe feel more like a recession or really weak growth to get inflation pressures down. Otherwise, demand isn't going to be weak. How could demand weaken if GDP stays strong? I don't see it.
Yeah, I mean, I think this is exactly the right question. I mean, this is exactly the right question. And the answer to how does core inflation get down around 2 is housing. And so if you take housing out of the inflation equation, we have kind of kissed 2%. It's been close to there. Now it's come back up a bit over the past 3 months. But the way that core inflation gets down without a big cyclical downturn is we see housing prices moderate. And if you look at some forecasters like the San Francisco Fed, the Boston Fed, their expectation is that housing prices are going to come down over the next quarter or 2.
Yeah, that's a very
Well, I think their expectation is that the acceleration of housing inflation is going to roll over. I didn't hear them say that they think prices are going to go into deflation. I think they might be mistaken on that.
But you generally don't get that kind of drop from where we are now to get overall inflation back to 2, absent a downturn.
Okay. Joe and Ben, want to leave it there. Thank you. Appreciate it. Thanks, guys. Thanks.
Coming up, will rising...
Yeah, but this run in productivity, mind you, is also something that some analysts think is exactly what's going to happen. The problem with productivity, Deutsche Bank was covering this. The problem with productivity is that it's not something that you actually realize is happening on a massive scale until it's already happened. So, in other words, you can only see a productivity boost in hindsight. And so if you see that in hindsight, then it doesn't do you much good right now to say, oh, yeah, inflation's not going to come down unless there's some crazy productivity boom. Okay, fine. But if you can't see a productivity boom until it's already happened, then it might be a bad idea to bet that we're not going to have a productivity boom, especially in the face of artificial intelligence. So I think that's somewhat interesting and worth paying attention to. But, okay, so Workday, I wanted to mention. So Workday went down from about 260 to 208. So what is that? 208, 260. Yeah, it's down about 20%. Down roughly 20% this week. And I just want to write down the commentary on this. So sales, let's see here. Sales may decelerate over the next 12 months. So I'll just say sales may slow over the next 12 months. Okay, lower headcount. That's a seats problem. So when you have software, remember, one of the ways you make money with software is a year-over-year comparison in seats. So you really need employee growth. So if a company has 100 employees and all of them have, let's say, a ChatGPT subscription, and next year they grow by 5% and they have 105 employees, that's like an automatic, easy extra 5 licenses for GPT. But what happens when those companies are like, nah, we're good at 100? You don't have that growth at all anymore from headcount. And so, yeah, that's really worth marking down. So I would do that. Lower headcount, expectations. So fewer countable things are fewer, not less. There we go. Fewer seats. And then the large software purchases. I always have a harder time understanding this one a little bit. Fewer large software purchases. So, slow down from 18% to about 16 to 17% growth. basically this would be like, Albertsons, let's say, going to Google and being like, yo, help us make this like inventory management system that we could search products for in our business or whatever. I think that would be an example of a very large project, a large undertaking that comes with, quite frankly, a lot of money, a lot of moolah. And it sounds like companies are just saying, we're good right now. All right, what is this contrarian 800-pound gorilla dude?
Assets under management. And Victor, thank you for being here.
A pleasure.
So tell us what you see. Before we get into the markets more deeply, talk about what you see just when it comes to debt potential offerings or debt opportunities, because this is really where...
Yeah, keep in mind the used vehicle indices are very, very volatile. But yes, used vehicle prices have been trending down, and that trend down has accelerated in the last 2 months.
As our view, economy is in kind of reasonable shape in the U.S.
Stop using the word inflation and use excess government spending instead and see how it changes your view of things for a month. Well, I mean, it would really only change your view if you actually didn't already correlate inflation with basically money printing and government spending. So that's important for folks who say, oh, inflation is solely based on, let's say, greedflation, right? Because basically, my thesis is, if inflation is greedflation, then deflation is charity. And let's be real, like, I'm not trying to say corporations are trying to be generous when they're reducing prices. They're reducing prices because they have to. They're reducing prices at Walmart, at Costco, at Target because they have to, not because they want to. They would love to be greedy and keep prices up. But the invisible hand, the laissez-faire, forces prices down over time. And so really, I think that's replacing inflation with excess government spending is useful for somebody who doesn't already think that. So yeah, for some people, I think that is actually a useful phrase. Let's see here. I mean, that's not the only contributor, but it certainly is as well. Obviously, you could have a supply chain crisis, like, really what you... That was very annoying. All right. So you're obviously going to have some level of inflation that occurs outside the level of the government. All right. So that's Workday. What else do we say here? Slowing seat growth emphasizes, what is this? A much higher exposure to large enterprise. 60% of Workday caters to large enterprises. Wow, I did not know that. 60% of Fortune 500 use Workday. Large enterprises are adding fewer seats. Aha. Okay. Reprioritization of AI spend, or of software spent to AI, right? Okay, I think that's really interesting. So, I mean, it's a good thing if if software prices can come down over time. There's so many subscriptions to pay for, and margins are already so high on software. So really, what's the best case scenario for a consumer? Well, best case scenario for a consumer is you have lower software prices. I think the same is true with Chinese vehicles, and I've made this argument before. Like, if you had no restrictions on Chinese vehicles, we'd probably all be driving safer and better. Just compared to like regular vehicles, Chinese-made vehicles in America with like pretty high quality that might rival Japan or maybe even exceed Japanese expectations, like a Toyota, right? Known for its quality. So, the government certainly gets involved at screwing up pricing, but as far as software, deflation in software would be a pretty good thing. It would help out a lot of small businesses, medium businesses, big businesses. So probably a good thing.
Real estate prices in office in the public markets with REITs are down about 40%. In the private markets, transactions are taking place down 60%, 70% from before the Fed started to 70%
Wow.
from before the Fed started to kind of hike rates.
So is your worst nightmare that the government steps in and makes it easier for the banks to extend these loans, for forgiveness to come to those who have signed these deals?
The government is not so forgiving, right? It's like they are not going to help the real estate entrepreneurs, the ones who kind of bought these companies with very high leverage. Well proven in the United States.
No, buying companies with leverage, not leverage buyouts, not a good thing in this time frame.
Risk issues, but they're well proven in the United States. They're not going to.
But are the banks in trouble? Are there, let's say, regional banks that have so much on their books that this would cause a problem?
You know, the U.S. banking system, the big ones, the $2 trillion banks, the $3 trillion banks, modest exposures to kind of commercial real estate. Of course, they're going to take write-downs, but with the high equity buffers, they're strong. It's a group of regional banks with 30%, 40% of their loan assets.
Don't worry, everything is fine at the banks, he says. Don't worry. All right, let's look at the used vehicle index. Let me see what I can get here. So, oh yeah, okay. So the used vehicle index. Let me see if I can pull this chart off. Yeah, it's definitely down though in the last couple months here. So it topped out at 257 December of 2021. That was like Tesla peak pricing. 257, and now we sit at 199.1. So we're off about 22% from peak. That's wild. So let's write that down. Peak was December 2021, now down roughly 22%. And that is in March or April? In May. In May. 2024 from then. Yeah, that's some pretty good compression there. But really, it's like a normalization of the data. You can see it here on screen. So this gives you wholesale used vehicle prices, and it's very volatile as well. 0.3 from April in the first 15 days of May. Mid-month value rose, which was down 11% for the full month of May. Wow. That's a big drop in May. Seasonal adjustment mitigated the results for the month. Non-adjusted price, okay, declined a bit. All right, that's fine. So this is the year-over-year decline in pricing. Oh, that's very interesting, actually. I'm going to save that. So the look at that really quick. The year-over-year declines, total down 11.3%. Oh, it must be May year-over-year then. Down 11% from May of 23. Yeah. Okay. So these are the year-over-year declines. That's very interesting. I'm going to screenshot that. So year-over-year declines in cars. It looks like the biggest decliners were mid-size and compact cars. And then this is the used vehicle index, which is the reference point that was made by the commenter. But yeah, you can see this sort of normalization. Still have a lot to do, though. I mean, you got to get down another quarter, basically. About another 25% to go just to be back in normal. That's wild. So I don't know. But the reality is it probably will never go back down to here. It'll probably go back down to, I mean, just do 150 times 30%, right? So 195. Oh, well, we're getting pretty close. So you might settle out around 195 and then sort of be at this post COVID normalized pricing, which is obviously going to be a leg higher than what it used to be, but it'll basically be inflation adjusted back at the levels where it used to be. Well, that's interesting. Can you also look at the University of Michigan's Consumer Price Index last month? Are you talking about the expectations in the university? Because the U of M does expectations. U of M expectations, right? The survey of consumers. So Usually just on their homepage, honestly, they have this. Okay. Come on, buddies. Charts. What do we have here? Tables. Surveys. May. April final results. Well, that's last month. All right. Oh. Microsoft Word. Gross. Give me all the data. Papers. Data. Time series. No. I don't know where they're hiding it right now. Here we go. April. These are all tables. April monthly. Oh, yeah, I'm not going through. Oh, this is a lot of data. I'm not going through this right now. But, yeah, anyway, usually... Oh, yeah, this is... I wonder if they changed how they're doing this. Final results, data booklet. Let's look at the April data booklet. Oh, here we go. Index of consumer sentiment. So here's your 3-month moving average on consumer sentiment. Big deal. Here's your... I mean, it is good, right? Like, it's going up. Sentiment is clearly recovering from the summer of 2022. I actually remember in the summer of 2022, I was in Florence with Lauren. And Florencia. And I remember Tesla was like $120, it felt like, or something. I can't remember. Maybe it was like 150 or something, but it was so low. And I just remember it felt like every day on the vacation, the cost of the vacation was becoming more and more expensive because of Tesla stock collapsing. Which is funny because now it's just, I've been trading so much that it's actually really enjoyable because, I mean, knock on wood, but I'm going to actually do that. The last set of trading has just been really great. So hopefully we can keep that up. But yeah, Florence is pretty sick. Let's see if I can get us some pictures of that. But anyway, oh yeah, here it is. Pretty sure. Yeah, this is somewhere. Here's somewhere in Italy. Where are we? I don't know where the heck we are. But I figure I put up a picture over there. Yeah, that was back May 2022. That's pretty cool. But anyway, that was sort of like a sentiment bottom. I always personally like sort of comparing what's going on with a market with and consumers with sort of where you were in life at that time. And so like vacations are a really useful tool for that because it's like, oh yeah, okay, I remember that. Yeah, sentiment was pretty poopy doopy there. So yeah. Okay, so that's consumer sentiment, then expectations, sentiment again. Now, let me see, does this ever... Oh, it's very volatile here. You get these big recoveries coming... Look at that. The last time you got it was in 2012. Was the last time you had a big recovery like that in consumer sentiment, which was weird. This is like you had a double dip in sentiment over here. So a lot of people were worried about a double dip recession when I was getting started in the industry, and I'm like, what are you talking about? Like, I remember in 2011 sitting down with people, and they're like, oh, there's going to be a double dip. I'm like, I don't see it anywhere in the data, in the market, and talking to bankers. I have no idea what you're smoking, but whatever. People were convinced there was a double dip recession coming. Oh, that's interesting. Okay, so sentiment by political party. The Democrats have a lot higher sentiment than independents or Republicans right now. Republicans have the lowest sentiment. So if you're pissy in the chat, you're probably more likely to be a Republican or an independent. And Democrats are very happy right now. How interesting. I actually do think that's very interesting. Yeah, current financial situation compared to a year ago. Yeah, I mean, that's great. So you've got, even though there's so much pessimism, there's actually a move up here. Higher prices as a reason for worse personal finances. Wow, that's an interesting chart too. That's actually becoming less of an issue. This is a great report. I don't know who told me to go look at this, but this is great. Income, reasons for changes in personal finances. Higher income minus lower income. Okay, so income, this is basically saying income stable. Wealth, reasons for changes in personal finances. Yeah, some increase over here. Expected change in a year is going much more positive. Annual trend in past and expected household finances, fine. Current financial situation compared with 5 years ago, meh. A little worse. Expectations. Oh, wow, they ask a lot of questions. This is freaking crazy. Where are the price expectations? Probability that personal income will increase. Real income gains during the next 5 years. Oh, gosh. This is insane, just how many freaking surveys there are. Probability of an increase in stock market prices in the next year. Wow. I'm pretty bullish on that one. Current value of stock market investments, moving up with the stock market. That makes sense. Value of primary residence. Change in business conditions is improving. News heard about price changes. A lot. News heard. That's silly. I just want to see prices. Expected change in interest rates. Expected change in prices during the next year. Wow, look at that fizzle. That's really interesting. So when inflation was high, people were expecting that inflation would continue to be high. 5 years, like, so stable. Opinions about government policy, buying conditions for large durables. Oh, wow. This is good for end phase. You know, you're trying to get back. Buying conditions for vehicles. Oh, very, very slowly improving. This is such a great data series. Wow. It's 122 pages of just like sexy charts. See, I don't know about you, but this stuff is exciting to me. Economic certainty, reason for buying conditions for vehicles. Interest rate reasons for buying vehicles. Changing gas, down. Buying conditions for houses. Yeah, I mean, you're just teetering along the bottom, basically. Worst possible buying conditions for houses. Selling conditions for houses. Yeah, they're not as hot as they used to be. Boring, boring, boring. What is this? Expected mean change in home values over the next 5 years. Up, like, I don't know, but I mean, long-term average is like 2.5%. Now people are expecting 4%. That sounds about reasonable. Wow, cool survey. Cool survey, bro. So interesting. Somebody says, why did I buy Enphase instead of First Solar? Well, obviously, you're asking me that question because First Solar has outperformed Enphase. The reason I bought Enphase instead is because Enphase, in my opinion, has substantially more pricing power in selling inverters than First Solar has selling solar panels in the face of substantial Chinese competition. So solar panels are basically a commodity, and it's pretty rough in terms of solar panel pricing. So those are some real risks for a company like First Solar, but obviously they're doing A-OK in terms of the stock here recently. So good for them. Okay, cool. So let's drop this in. So now I've got, where is it? Oh yeah, the two used car data sets we were gonna throw in here. Okay, cool, I'll have those. All right, let's listen in here for a moment.
They know that it's much higher. Otherwise, 5.25% would be super restrictive. And we continue to hit high after high on the stock market. We continue to get an economy that at least Atlanta Fed is forecasting growing at a 3% rate plus.
Well, I think that, Matt, they would agree with you that it is higher. The question is how much higher, and as Bill points out in his column, there's no real way to know because there's no way to measure R-star. John Williams, the New York Fed president, had put together with the late Tom Laubach an index of it, and they haven't been able to make it work right since the pandemic because the numbers got all screwed up. So the Fed is sort of flying blind on this. I would expect at the June 12th meeting they might revise their estimate of R-star, the neutral rate, higher a little bit, but I don't think they're going to go as high as you're talking about at this point. Interesting thing, we get to hear from John Williams today. Noon, he's speaking to the Economic Club of New York. We'll see if he says anything about this.
All right. Well, it's a fun debate, at least. Michael McKee, thanks very much for joining us. Let's get back to Jack Janasiewicz. He is portfolio manager, lead portfolio strategist at Natixis Investment Manager Solutions. And Jack, I wanted to know where you see opportunity in a market that has already run up so far, so fast. And as one of our Bloomberg columnists points out, no one's buying these way out of the money call options right now. So even though everyone seems to want to get in, no one's betting on a huge rise in the future.
And I think the key here is still going to be the interest rate backdrop, right? I mean, for us, large cap equities on the growth side still makes sense. But to get that sort of broadening out and market breadth, it all comes back to the interest rate backdrop. And I think you need to have confidence that the interest rate backdrop is going to move back down again. And that, I think, will spread into the mid cap, for example, sector of the marketplace. And so, it all comes back to the interest rate backdrop. That's the key to, I think, seeing a little bit of a shift underneath the surface. Until we get confidence that that's the backdrop that the market is getting in tune with, I think you're still going to be looking at large cap growth names being the leadership in here.
You need, I guess, then rate cuts to boost small and mid caps because they're most susceptible to floating. They have obviously.
Yes, I've mentioned that so consistently that it's the smalls and mids that get burned by higher interest rates. So yeah, you can actually get a revolution in pricing for smalls and mids if you, ultimately here get. What's it called? Lower interest rates. So, but matter of time for that. Wanted to show this. Take a look at this. This is these are some adorable little house hack vests that somebody gifted us. These. This is Ella and Claire. Ella's kind of like holding up her little house hack logo there. Kind of cute, little baby vests. Slightly big on them, but still super cute.
Could be a market that a lot of investors see as uninvestable. But what do you look at outside of the U.S.?
Yeah, the China story is very interesting, right? Significant bounce off the lows in here. And I think we think about this in terms of that distributional outcome, right? Left tails versus right tails. And, I think the market was really starting to price in potential for a significant left tail event, downside risk. And the more recent policy announcements coming out of China and the PBOC, they could try to put a floor underneath that left tail risk, so to speak. So it's chopped off maybe that downside risk, that significant 2 or 3 standard deviation move, if you will. And as a result, the market had to reprice that rate outlook or the risk outlook, which meant repricing stocks a little bit higher in here. The question, though, is do we continue to see policy coming from the PBOC and the Chinese to open up the right tail, which is the upside risk? To us right now, the incremental steps they're taking is more of a floor. I think we need to see more to see that right tail open up to get us more interested in emerging markets and specifically the Chinese equities there.
Right, and it could be there are risks there that a lot of investors just aren't willing to take. Jack, great talking to you. Thanks so much for joining us. Jack Janasiewicz.
Yeah, this is a big discussion in the office as well as like what's going on with China. At least one person really gung-ho about buying the dip on Alibaba, for example. So I also put a few catalysts up on eHack. It might take a moment for the cache to refresh, but basically these are the expectations for tomorrow, so you have that. PCE release is tomorrow at 5:30 a.m. I can't believe it's already Friday tomorrow. You had a shortened trading week this week, but the expectations are PCE deflator is going to be month over month 0.3, so that'd be pretty along expectations. I think the average expectation is 2.9 for tomorrow, so that's pretty good. We're gonna get to see some more of that. Hopefully normalization of inflation. Then you're going to look at the year over year at 2.7, month over month core to be 0.3. I'm going to check which one is the average, whether it was core deflator or month over month, year over year 2.8. So we'll look at this at 5:30 tomorrow. Remember, this is heavily derived from CPI and PPI for the month, so maybe not a big surprise. Obviously, coupon code expires tomorrow. I always like to be as transparent as possible with this Webull trading account. And so every day I just post my P&L. You can see our 5-day realized P&L. This is the only account I trade in. Is 129K over the last 5 days. So some of these trades, or I should say a lot of these trades, are picking up 40, 50% on like a 60K bet. So it's a lot of options trading. And my goal can't obviously guarantee that it'll keep going. But usually the way that I like to trade is I try to trade where the downside is limited. Like I'm trading right on a support line basically. And I'm basically just trying to hold, like if pricing just stays stable, I kind of have like a free ride for like an hour or 2 hours or whatever. And if the stock moves up, great. It almost feels like free money sometimes. So that's sort of what's been working pretty well for me this last month. And so if you want alerts on that, make sure you're part of the Stocks and Sight group. The Stocks and Sight group is what's it called? Linked over at meetkevin.com. If you have questions, email us at staff@meetkevin.com. Here's the 1 month, just so you have the transparency of it. There we go. 1 month right on the account. It's like, what is that, 646. It's a little different because I do have some long positions there. So you see the long position is up like 80K because the total 724. But the realized, the trading side there, 646. Anywho, okay, let's go jump in over here to CNBC's for a moment. Oh, and I do also want to take a quick check at the sticks just to see how what's the trade going to be today? You're sideways on UiPath. Qs are down. ARM's up 85 bips. NVIDIA's down 26 basis points. Really trying to look at that. It was resting on that 1140 figure here. And Enphase is resting on, how interesting, the 125.60 line. Got a new line for us there. So very, very cool. So Kevin's tired this morning. I'm a little tired. So let's see here. Why is Tesla going? Tesla's moving this morning over excitement about registering their FSD software, full self-driving software, yeah, in China. Although you could see on my chart here, it's range bound. Like, you know me, I like these lines have been here for a while. It's not like I draw these and then I show them to you. It's like they've just been there for a while and the stocks happen to move within them. They're very powerful lines. They're very useful for trading. And it's really the people who think that the trading lines are fugazi who really give money to the people who realize the lines do work. But anyway, as you can see here, we got rejected twice at the 179.67 level, and we're bouncing around the 178.56 line now. I think what'll happen is if we get a breakout today, we'll be at 182 or 185 today. 183 is another line. I don't actually have a line for 185. So it's going to be more like 182, 183. We'll see how those lines are in play. If we break out at the open, the Qs right now are slipping, but Tesla doesn't always follow the Qs. Let me see what else is moving. Upwork, 83 bips. Okay, whatever. Salesforce, 16.7. Wonder if we're going to get a lot more bleed over here. Workday's down another 2. Oracle's down a little bit, 2%. I think Palantir's up on that deal with the military there, but only 1.8%, so a little low there in terms of a move there. Yeah, this week did fly by. Costco reports today and Ulta. Ooh, it's going to be very interesting. Top investing stocks right now, or are you just trading? I mean, this is just going to sound like I'm like trying to just like pitch like one thing, but I'm not. So I'm not going to mention the name of it. But honestly, like for my long portfolio, I've just been convinced that the best thing for me to do is diversify to a basket of about 20 to 25 stocks. Like I don't want too many stocks. I want to follow sort of the Warren Buffett 20 stock punch card method. Or strategy or whatever you want to call it. So I don't want to be like over diversified. This is just me, my personal portfolio. It's not personalized advice for you, right? So that's sort of the goal for the long. And then I'd rather take that, take advantage of sort of that single stock upside or downside play in trading, because I could play that with options versus risking the whole portfolio on sort of like a bet for an individual stock. So anyway, yeah. Somebody here donated $5, MJ Matrix. Evan, good morning. I learned so much from you. Thoughts on Gary Cardone selling his real estate for Bitcoin? Oh, wow. Well, I don't really know anything about Gary other than he's apparently Cardone's twin brother. I think I don't even think he actually I'd have to look, but I don't actually think he actually owns real estate. I think he just owns interests in Cardone Cap, and I wouldn't be surprised if some of the price, sensitivity on the Cardone Capital properties has been a little bit under pressure, given that you've got higher leverage, is my understanding. Could be wrong. And obviously interest rates are resetting higher. So I think Gary trading his his real estate interests from like Cardone Capital into Bitcoin is more of a sign of him trying to escape potentially high leveraged resets. And it's almost sort of like an insider trade alert, if you will, on what might be going on over there. That's my speculation, obviously. I don't know. That all of what I just said could be entirely wrong, but let's just say it wouldn't surprise me at all if that's exactly what's going on. But could be wrong, so who knows? So somebody here says it was just his personal house. Yeah, whatever. So let's see here. Hood up 1%. Let's go. Yeah, I've got some exposure to Hood. I wanted more exposure to Hood, but that's usually how it works. That's the stocks you want exposure to just start running, and then you got to pick up some options, which I had some options on Hood yesterday, but that's all right. So, and I know some people are like, oh, Kevin, how come you can't trade options in an ETF? ETFs are generally very narrowly bound to what their prospectus rules. So, for example, if you have, let's say, a commodity long ETF, then people aren't expecting you to trade in it. Usually what people do when they want to trade on behalf of others is they create like a hedge fund, which is like a Bill Ackman style. Hey, we got a bunch of shorts on the market going into COVID. Oh, I'm going on CNBC. I'm going to talk about how everything needs to shut down for 30 days to slow the spread and print money. I mean, good for him. But yeah, that's it's very interesting. But that's usually more where you see some of that real trading come through, as well as alts. In a hedge fund, you have exposure to real estate or alternative investments, whatever. So, all right, let's listen in over here.
Talk about the impact of AI and what it's going to mean. You want to come back and talk about
the AI PC is the next big thing. And by the way, who's in the AI PC? It's a switch.
AMD.
All right, this is boring. So, wanted to just reiterate these charts right here. So, buying conditions for vehicles. This is obviously positive for vehicles. And, remember, Tesla's 0.99% interest rate was pretty fantastic offer in May, for example. I wonder how their inventory has moved on Model Ys. That might be something to look into. And then I wonder when they're going to report deliveries. So Tesla deliveries May 24, because that'll be a catalyst. Tesla. Well, I'm guessing it's probably going to be Monday morning. And they usually do it at like 8 a.m. before the market opens. So, oh well. I'll keep an eye on those delivery numbers for... Wait, hold on a sec. Delivery numbers... Wait. Usually we only get quarterly reports. We're not at the end of a quarter yet. April, May, June. Oh, no, never mind. We might have to wait. We're not at the end of a quarter yet. Oh, well. But who knows? You could get some China data or some other estimates from analysts for May. I'm very curious to see how the numbers went for May with that lower interest rate promotion.
By this sort of AI phenomenon.
Always, and it's such a tough, a fine line to walk. I don't think any of these companies, especially stalwarts such as Salesforce, can afford not to engage with AI. I think Salesforce risks becoming irrelevant if it doesn't work AI into its existing products or come up with something completely different that is very AI driven. But it does have this big core business at stake that it can't just let stagnate.
I mean, by the way, if 8+% growth is your slowest quarter in history, in decades of history, that's not too bad, right? And they didn't really miss by too much. What did they need to come out with to please analysts? Was it like just 10%?
I'm sorry, I don't have the number offhand.
But it was only fractionally higher that they needed to move, right?
It wasn't a huge miss. I do think the numbers did make Wall Street nervous. And as we have this conversation, the market hasn't yet opened, but we'll be very interested to see if those losses in the pre-market trading do hold, and if they hold all day.
Yeah, no, you're absolutely right. These things do change throughout the trading session. Dana, thanks so much for joining us. Bloomberg's Dana Woolman talking to us about really the big tech story, I think, in at least the early trade, which is Salesforce, the plummet after earnings yesterday, and we'll watch how it does at the open, which, by the way, is just 7 minutes away. Coming up, the morning calls. Then later, we're going to speak to Alex Chaloff, CIO at Bernstein Private Wealth Management, on why he's still bullish the S&P 500. This is Bloomberg.
Yeah, just writing down here, not a surprise, Republicans have a sentiment level of around 60 versus Democrats around 100. So big difference there. So these sentiment charts were fascinating. So anyway, all right, let's see. All right, we got only about 6 minutes to go for the bell. Wow, that's just like flew by today, huh? Everywhere you trade crypto in the short term. You know, I've played around with crypto via Coinbase, so I kind of usually when I trade, I look at a stock and then I trade a derivative of it. So that could be like I'll watch Nvidia to trade Dell, for example, or Supermicro or whatever. And then I'm getting derivatives on that. So it's like the derivative of the derivative. But anyway, yeah. I mean, trading directly it is interesting because, you know, Bitcoin does follow the lines pretty well. So maybe. What happens to the money left from a put or call that expires? I don't think there's any money. I mean, if it expires, it's worthless. It vanishes. It disappears. The person that, you know, took the premium got 100% of it, and the person who paid it lost 100% of it. It might, in your portfolio, say, like, oh, it's between 0 to 1 penny. And then what the software usually shows you is the midpoint price, which would be like, you know, like an increment of 5 in there. So like a half, like a 0.5 or whatever. And then it implies that that contract still has market value. It doesn't. It's 0. And so somebody here says, I ordered a Model Y on Sunday. It says it'll be delivered June 7th to 21st. I've seen a lot of people take advantage of that Model Y 0.99%, honestly. Yeah, see somebody else here pulled the trigger on my Model Y performance with 0.99. Yeah, our in-house counsel just bought a new Model Y as well for House Hack. He also just won a case, which was pretty cool for House Hack. Go House Hack! Slam dunked that. Actually, 2 in a row now, which is amazing. Anyway, so, yep. All right. 3.5 minutes to go. What do we have? Let's see here. So, let's see here. We've got UiPath 30.3 for their decline. Salesforce decline is accelerating. I wonder if this sucker's going to be down like 20% today. It's going to be really interesting. Tesla's sitting right at its line, the 178 line. The Qs are actually rising into the open. Now, this is going to be interesting. Yeah, Rob, it's all in every disclosure we have for House Hack is in the PPM, which you should have access to on the House Hack Investors tab. So, what else here? Workday. Qs. What is this? C3AI. 10.5%. It's pretty good. Let's see here. Oh, interesting. Okay. Yeah, let me... I think, oh, there it is, investor update. Okay, okay. Yeah, the fundraise page. Let me make sure that's... let me get you an update on the PPM to make sure the fundraise page is there, because we ended the fundraise, so I'm gonna make a note to make sure that investor page at least has the available PPM right now. From, let's see here. Okay. Hold on, I'll play this for a second.
Good situation, better than people thought. I've been waiting for Mary to get a real handle on it. I think she's got it. That doesn't mean her 2-year recovery is pulled ahead, but she had, I felt, the hand of a winning, finally has a winning hand, but it's going to take a while to play out. But I just think she was very strong this morning.
Signs of life, that's for sure, right? Not the same at Kohl's, as we said earlier, which is going to be down sharply. It's been a very mixed bag recently.
Okay. So what I'm gonna do is I'm gonna make sure at the top of the investor updates page at Househack we have whatever the latest PPM is and the latest financials just linked there, so it's really easy. So I'll get that taken care of. But yeah, we just ended the last fundraise, within the last like 30 days here or whatever. So, okay. Yep, we'll make sure that's there. And you can always email us too. ir@househack.com if you ever had questions. Okay, good. We're now 30 seconds away from the bell. I got a little distracted there, so I guess we're not doing Who Wants to Be a Millionaire today. But let's see what we got. We got 19 bips on the Qs. Well, a little bit of red candle in the final minute here going into the open for Tesla, Qs. Nvidia's only down 12 bips after that Salesforce mess. 80 bips on Enphase. Very cool. All right, and remember, coupon code expires tomorrow for those trade alerts in the course member live stream. Let's listen.
Celebrating its 10th listing anniversary. Jim, I guess we'll keep our eye on CRM. The spoke points out this is the first revenue miss since 2006.
Yeah, I mean, these are amazing. We are seeing some companies that are just missing the mark like you can't believe it. I don't know. I mean, then we see this is a have-not. Like,
it's a nice little drop there right at the open. Here are the Qs. Tesla's trying to figure out what direction to go. It's a little bit of a candle moving down there. Workday about 2.7 down. Dell's moving down. C3 AI's moving up. DJT's up about 1%. Salesforce moving down more. Nvidia's moving down. Enphase is moving down. Ubiquity, I mean, has so little volume. So what else here? Workday. Yeah, okay. You've got, you've got a little bit of a move there on Tesla. That's pretty decent. Looks like trying to move up there on Tesla, and then Workday, you've got to move. Qs a do's. Yeah, Qs are trying to go up already. ARM's trying to move up. Nvidia, 29 bips, still to the downside. Enphase moving a little bit. And Ethereum still sitting at its line. Apple's not really going anywhere. That's not a surprise. UiPath is dropping even more. Salesforce is also dropping, but it's trying to settle down on that drop. So see what happens here. Let's listen to Jimbo for a moment.
And that's why
Tesla just gave up 0.5%
of the economy right now. Now that the government is kind of just doing some infrastructure.
Well, yeah, Microsoft alone spending $50 billion. Alphabet going to spend $40 billion. I mean, the numbers are enormous.
And
we all pointed them out during their earnings when they came up with those numbers, which we've never seen the likes of in terms of CapEx.
Never.
And to your point, a lot of it is going towards building data centers and putting in the infrastructure. They're not building the power plants per se.
No, but they're begging the power companies to come to, please be solar. Now it's
right. Well, they want renewables to power the data centers whenever possible. Although to your point, it may not.
Oh, Dell's down like 3%, almost 4%.
Simply the larger question of whether the grid is going to have enough capacity to power all this AI.
But Nvidia goes positive. This is crazy. Holy smokes. So Nvidia's going positive. Tesla's like tanking. And Dell's tanking. This is very interesting. What an open. Holy smokes. ARM's rising. So ARM up, NVIDIA up. NVIDIA's basically at all-time highs right now, knocking on the door of it. Enphase stops its run. Tesla's over here at, oh, okay, that's pretty violent. Some really violent moves today, honestly, on Tesla. Kind of interesting. Okay, so then you've got the Qs. Qs are trying to rise here. Pretty good. And let's take a peek at what does Jimbo have.
Yeah, well, look, we're getting over and over again that some guy, like Meta's concerned because they have expansion plans that require much more electricity. They're the biggest buyer other than Amazon of Blackwell chips.
Yeah, you buy the chips, you got to have somewhere to put them, and then you got to have power to actually make it work.
Remember, you can't buy the chips without putting them to use.
I love these like random dings. Get them off the platform.
You know you can't do that. You can't play that game.
I didn't.
Q's just had a nice little red can. I mean, this is just so volatile. The first part of the trading day, very, very risky. Because it's so hard to find direction. I usually don't trade this early. I did send out a buy-sell alert to those in the Stocks and Psych group for just this morning. But yeah, look at that. Nice little drop there on the Qs. That's going to create some additional risk. So careful. Unless you're going short. Oh, yeah, look at that NVIDIA drop. That NVIDIA drop's really interesting. It literally just ran up to all-time highs and then got rejected again. So, okay. Where's Dell now? So, Dell has a nice little rotation down. That's a little aggressive there. And Super Micro, also fat red candlestick there. Holy smokes. And then the Qs are just really just giving up on their numbers this morning. So very interesting. Let's see if these will slow their fall here. I mean, Dell's at like some of these crazy all-time highs, and volatility is pretty high on it as well. So you've got a lot of movement into both directions. So these are the Qs right here, down about 45 bips right now. Yeah, Dell's somewhat melting. I don't know if that's going to keep going, though. I think this will be your tell right here if you get a movement on Dell. Is are you going to break that 140 over here on Dell? Oh, sorry, on NVIDIA. So that'll be one to watch today. Okay. So then we have Robinhood's only up about 16 bips right now. You've got a Workday at 2-ish. The Qs, honestly, they keep bleeding here. And you did get a bounce on NVIDIA. Not bad. Okay. What? They got anything for us yet?
Major impact. And I was listening to him. I said, oh, my God. What, didn't you get the memo that says you're supposed to be in total denial about Jupiter's ones? But I guess when you're the largest confectionery company in the world, you've got to say, you know what? It is. We got to pivot. Now, his pivot is being reflected in the. Well, not yet. That's no. Okay, but he is admitting, Carl, that they have everybody.
Qs keep going.
And there's not enough protein, so elderly people get frail. They have to put more protein, I guess, in chocolate bars.
Well, we did talk about.
NESTLS makes for GLP-1.
We did talk about their new food line called Vital Pursuit last week, which is for GLP-1 users.
Yeah.
And Gottlieb's theory that there'll be a whole industry of consumer products for people who are on those medicines.
Yes, Abbott Labs has the drink right now, the protein drink. Now, Abbott Labs has a couple lawsuits that are actually, Reckitt Benckiser lost a lawsuit about formula that is suppressing the whole group. But Goldman Sachs came out this morning with the most bullish Abbott report I've seen. No one's going to buy this thing until, this is what I'm telling club members, that until you see a couple of lawsuit wins, which they haven't even come to trial, but they have a lawsuit.
Yeah, Abbott Labs lawsuit wins. Okay. Oh, man, pharma, that's not my world. You do have a little bit of a recovery there on NVIDIA. Look at that, bouncing on 11, literally on that 1140 line. I mean, this one's such an easy one to trade because it just goes to the next $10, basically. C3 AI is really actually rallying here, quite remarkable as well. You've got ARM, that's sitting at about 1%. Dell sort of is the gift that keeps on giving to the short side. And then we've got What is this? The Qs that are rising now. I think finally Dell's going to get a green candlestick here. I personally would, like, if you're looking at shorting Dell, I'd probably wait for a bounce here. But that's what I'm thinking. Yeah, look at that. NVIDIA's going to go for it. It's going to go for that all-time high again. 1154 is that all-time high. And then again, remember, if you want that those trade alerts in the stocks and site group is where I send those out. Oh, my trade this morning is up 20% already. Let's go. Let's go. But I'm not going to close that yet. I think we got a trade here. So, and you get lifetime access to those courses too. Qs, trying to pull red again. This is, what a day. Yeah, look at it. It just can't break out on that all-time high. But what is trending nicely right now is end phase. So don't sleep on end phase. Somebody told me that once. Like, Kevin, you're sleeping on it. Like, that's like the worst thing you can say to someone who doesn't get a lot of sleep. I wish I was sleeping on something. But anyway, okay. So Qs. All right, let's look at where are we sitting. There's Ubiquity. That thing trades so thinly. I like that one though as a small cap reversal play. Apple 191. Google's down. Intuit's down like 4%. Wow. Intuit's really falling there. Oh, so is Monday. That's interesting. They had such a run on earnings, and then all of a sudden, I think it's just the Salesforce numbers are just wrecking the software industry, and showing that maybe their pricing power just isn't what people thought it was going to maintain as. So find that very interesting. There we go. Q's recovery. And Bitcoin 68, NVIDIA up about 40 bips right here. Looking at, again, knocking on those all-time high numbers. Okay, cool. So PayPal admitted ETH is broken and too expensive to use. Yeah, the cost for ETH have been coming down a whole lot. Somebody says Clove trending nicely. Somebody says Kevin's all about shorting now. Yeah, that's funny given that my trade this morning is all about a call option. Yeah, Q's up 31 bips. The end phase train. Problem is, like, you know, is the train keep going? First Solar's moving down. What about SunPower? How's SunPower this morning? SunPower about 30 bips there. Yeah. All right, let's listen in here again.
Come up with something here. He said we continue to talk to the NBA. I'm hearing same, of course. They continue to talk. Their focus, as I've reported previously, on that potential package that Amazon has, that so-called streaming package that the NBA has, not on the package that our parent company Comcast seems to have more or less sewn up, and not on the Disney package with ESPN, but on the Amazon package. But it's unclear whether they will figure something out there. Is there going to be a dispute about not just meeting on the economics, but on what the NBA wants in terms of a streaming partner and whether that could be represented by Max? Because that doesn't make necessarily economic sense for Warner Brothers Discovery just to sign up to stream on Max and not have it on TNT. You've got to have it on TNT.
Boring. Don't care. Come on, baby.
Again, you're getting good earnings, good guidance from those AI names. But yes, to answer the second part of the question, you're also getting a broadening out. We've been talking about this whole forgotten 493 for the last, 9 months at this point, and that continues. So really good earnings across the board. Yeah, there were a couple of disappointments, but that's okay. You get that in a cycle. But broad strokes, really good earnings season.
All right, so analysts have been, raising their forecast to catch up there. We've seen, strategists continue to boost their targets for the S&P 500. The most bearish strategists capitulating, finally throwing in the towel. Does that concern you? Because now everybody's on board.
I think, look, it's confirmation that we are really in a bull market. The fact that you have strategists suddenly ripping up their old piece of paper and saying, all right, fine, 5,600, 5,400, whatever it takes. That can be a contraindicator at times. But in our view, it's really just confirmation that this is a real bull market. And look, momentum's strong. Momentum is a very powerful factor, and it is full in play right now. So is it concerning? A little bit. But the fact, again, that it's happening in the midst of a very good earnings season, I'm okay with it.
So what do you like then right now, Alex? I mean, is active management really necessary right now, or you just pile in to an index stock?
I would not be piling into a broad index today, because when you buy the index, as everybody knows, it's market cap weighted. You're getting last year's winners. The indexes are not a forward-looking instrument. They're very much a rear view mirror. Our view today is that, again, back to the 493, there's real value outside of the Mag 7. Well, I like Mag 6, but there's real value outside of those names as well. And active management definitely will pay off. I think everybody loves the S&P. Everybody loves large cap. Everybody loves growth. You got to give a nod to that and have exposure there. But if you want to be a little bit of a contrarian, look outside the U.S. Think about Europe, where any little shred of growth, of surprise, gets paid and paid and paid. And then I'd also throw emerging markets into the mix. I think a lot of people haven't really noticed because they've given up on EM and China. Those two areas have ripped of late. And so we continue to have confidence there.
All right, we've been talking a little bit about that today. What about
China? People think the bottom might be in for China. I don't know. I wish I was there. I wish I could just hop on over and understand it a bit more.
To private markets, but also yesterday, Jamie Dimon said there could be hell to pay if something goes wrong there, and more retail investors are getting exposure.
Yeah, I think you got to separate what's going on in the private equity markets from the private debt markets. And I think there is a real glut of capital in private debt. I think the headlines that are raising concerns, they are real. That's not just a lot of pomp and circumstance. There's a lot of money that have flown in there, and that's forcing some groups to make deals that we wouldn't do, that I think any decent underwriter wouldn't do. But because they have such a surplus of capital that they feel like they've got to put to work, they're doing some things that I think when we fast forward 2 or 3 years, you're going to look back and say, whoops, that shouldn't have happened. Good news is there's still a lot of dry capital from good investors out there that can buy those mistakes at a deep discount and generate really great returns for that next set of investors. But I think you've got to be really careful in private markets today. Love the opportunity. Love the fact that there's uncertainty in the public markets that's creating real opportunity in privates, but be careful.
All right, Alex, great catching up with you. Hope to see you again soon. Alex Chaloff there, CIO at Bernstein Private Wealth Management.
Boring. Let's listen in over here.
They get something, will they get to the finish line in the next couple of weeks? Certainly they've been working at this for so long, one would expect that they're running out of time. I'm hearing from all sides that they would love to at least have something either done or know that they're not going to get there within, let's call it, early June.
And
but
who's running, Maria?
3 different gentlemen. 3 different gentlemen.
3-headed company.
Yes, it's not a recipe for success to have three non-CEOs.
The Pep Boys.
Yeah, the Pep Boys. It's like the Pep Boys. By the way, Sony and Apollo, I mean, they signed an NDA, it took 2 weeks, and nothing. Crickets. So...
Yeah. Okay, so let's go take a look at L Stickies again. So also just sent another alert to those of you in the Stocks and Site group. But otherwise, let's take a look at some stuff that's going on here. So we've got SMCI is kind of stuck under that 840 level, really bobbing around 820, being a little boring. You're getting a consolidation on Dell down 5.5%. You're getting a rally in Tesla. The Tesla rally is really driven by enthusiasm over full self-driving, registrations in China and the application for those in China. So keep an eye on what's going on there. Then you've got enthusiasm around C3AI for actually beating expectations, but they're still losing more money than they did previously, and they've got less gross profit, they've got less gross bottom line or net income, and to me overall it's a risky play of an anchor that's dragging along the bottom. Salesforce continues to move down on their misses. Tesla's now trying to break out over the 179 level. That's pretty big. Enphase is almost 4% today. The trend is really your friend here if you are going long on Enphase. This is NVIDIA is basically knocking on the door here of all-time highs. We're at 1154. This is pretty much where we topped out yesterday. So you're getting a lot of resistance at that 1154 level. I don't have any lines drawn there. I just know that 1154 level, there's C3I, nice candlestick, is something that's holding him back a little bit because it's an all-time high number. DJT's up a couple percent today. We'll see if there's any kind of move. If we get a verdict today on DJT, on Donald J. Trump. I actually think you will get a verdict today, but that's my opinion. I could be totally wrong on that. And I think he'll be found not guilty. I made a whole video on it yesterday as to why, and sort of my thesis around it. Ooh, look at FFIE on 60 cents on Faraday Futures here. Really jumping off that 44 level. Let me see this here. Oh, yeah, look at that. I don't even know why I have this line drawn here, but I do. Let me go to the 5-minute. Oh, wow, I have two lines drawn. I have a 35.83 and a 44.7. And look at that. We were literally writing that in the pre-market today. That's crazy. I think I went back into the historical to get these lines. Man, I always like to say, trust the lines. The lines are wonderful. Very, very cool. Is China coming out of recession putting pressure on commodity prices? Probably, yeah. And you're already seeing, just look at the BCOM index. You're already seeing commodity prices move up. All right, come on, baby. Come on, baby, light my fire. All right, almost 4.3% there on Enphase. Tesla up to 2-ish. Robin the Hood's only up about 1. Boy, their buyback really sort of fizzled on that stock. Qs continue to trend up, and so does Bitcoin. Bitcoin's up about $600 since we really started this live stream here, so that's pretty good. What lines do I have? I made enough money from 5 minutes of Enphase to buy your course. Let's freaking go, buddy. That's awesome. Welcome aboard. Go check it out at meetkevin.com. That's cool. Thank you for commenting that. Obviously, I can't, for anybody else watching, obviously I can't verify that they did that, but thank you. I can't guarantee that past performance will equal future results, but I think we're pretty green on the day so far today. Oh, wow. Holy crap. That one's up like 40%. That one's up 50%, 45%. Two of my trades this morning are up 44 and 47% right now. Let's frickin' go! Okay. Sunrun, 3.5, Spirit 4, Trade Desk bleeding a little bit there at 95. Why? I don't know. Pending home sales numbers are out within the next 10 minutes. Wingstop-a-doos. I hate this company. Consolidating. Costco's got earnings today, apparently. Ulta. Monday.com, 5% sell-off. Oh, it's honestly because of Salesforce. I blame Salesforce. Screwing everybody up. Wow, look at where the candle went. All the way down here. I have a Fibby at 215 for them. What a gap. What a grab. Look at this. Whoop. Oh, boy. That's crazy. Okay, so, ooh, and Dell just wants to keep giving. The Dell short wants to, it's the gift that keeps on giving. Somebody says NVIDIA at 1200. Who knows? I mean, somebody was asking about that yesterday, and we went to these all-time high figures here on NVIDIA. So we are at all-time highs right now on NVIDIA. NVIDIA does not give a flying poopy doopies at all about what's going on over at Salesforce. Just come on, keep buying my chips, baby. I don't care you make money with my chips or not, just buy my chips. That's kind of what NVIDIA's, chanting right now. I don't think they're actually saying that. I think Jensen's a really nice guy. But anyway, what do we got here?
6 straight days of gains in this stock. It is at a record high because we're all thinking not only will it leverage AI on the PC, and we can get a Dell PC at that, but it's also that they're selling more servers and they're selling more AI-related servers, something that's boosting their own ability, particularly as we've got more Jensen's actual GPUs able to buy them, able to see the supply side of them. So yes, Dell's going to do particularly well. At the moment, for a Salesforce, for example, we still want to see, well, where's the actual revenue benefit? You're talking a good game, but where's the spending on your AI offering?
All right,
Yes.
Caroline Hyde, thank you so much for joining us. Great to get a preview of Bloomberg Tech. She co-anchors Bloomberg Technology with Ed. You can catch that at 11 a.m. New York time. You'll get more insight into tech, plus an interview with
Enphase and Tesla. Let's go.
Is at 11 a.m. New York time. I'm Matt Miller. This is Bloomberg.
I don't care. Boring.
That's very good for GLP.
Boring. They're all going on commercial. Oh, look at that. Enphase. That's Enphase for you. And then there's Tesla's breaking out. 182 next stop, baby. 182 next stop. Come on, baby. Come on. All right. What is this?
It has often been.
They're just leaving. Okay. So boring. These people are boring, man. Wow. Look at Tesla. Pump. Then you've got, and the Dell bleed is interesting. I think it's just because it's coming off the all-time highs, and I think people are finally starting to realize, like, what is this? Like, why do I, why am I investing in something that gets a boost of, point whatever it is, a fractional percentage of their income from, quite frankly, AI. I don't know, it seems kind of crazy. Want to talk crypto? What's there to talk crypto? Give me a heads up. What is there in crypto? Give me some crypto stuff, and we can talk crypto. But Dell's about to be down about 7%, which is pretty big. And then it looks like we've got Tesla's moving to about a 3% gain here. I'm not exactly sure where Enphase is going, but it looks like it's about 6% right now, which is pretty remarkable too. Okay, what else do we have? So then we've got NVIDIA, 51 bips. Salesforce is almost down a full 20%. Honestly, there might be a move there if you get to 215 to go for some calls at about that 215 level. Not sure, but that's an option. Pun intended. I always like doing that. It's like, yes, pun intended. Yes, that is where the option is going to be. As far as, let's see here. What else do we have? We've got, let's see here. NVIDIA's got a nice little move there. Come on. I'm watching this one for the all-time highs, honestly. I want to see what we can get out of this. This is a fascinating mover to me. What's Tesla doing right now? Tesla's got, yeah, you're still trying to break out to the 182. You've got Salesforce. It's pretty good there on Salesforce, 20% still. I'm going to watch that 215 line a lot on Salesforce. What about Supermicro? Consolidating back to the upside. And then Dell. Dell, I want to go short on Dell. I think that's a juiced one. Considering the problem is, like, where's it going to go? And so I'm going to, let's see, zoom out a little bit on this. So let's see here. Okay. That's the 1 hour. Yeah, the problem is when you're moving around these sort of like all-time high levels, you're just in this position where you don't really have, like, I mean, I guess you could play the fibs, but I don't know. You could go moving averages on this. Does anybody have, I don't have any lines on Dell. I don't know, I feel like I'd be flying a little blind on Dell right now if I was really pushing on Dell. Okay. So then we've got, let's see, Jimbo here.
3 Mile Island again, that'd be something, right? I'd love to run that tour.
Jim, we can look forward to it. We'll see you at midday, and then again later tonight with Hormel on Mad. Meantime, S&P down about 15. The Dow is taking the brunt of the beating today. Don't go anywhere.
All right. Okay, that was a very entertaining morning so far. So I'm gonna let's see here. What about the Qs? How are we doing on the Qs? Consolidation on the Qs. Wow, I don't know that. Yeah, usually I don't have. Oh, let's freaking go! So just this morning, I generally don't trade the first minute off the day, but I'm like, I don't know, man. I think there's some trades to make here, and so basically right at the bell, what did I do? I went Enphase Tesla calls at within really, like, when I generally don't trade, within the first 15, 16 minutes of the day. Some of them even within the first few minutes. And the early AM breakout here, I mean, maybe I'm just a paper hander, but I'm like, oh my God, they hit 100K of profit. I'm taking that. And how much did I put on those? Because I know people, they want to know. So that was $48,000 was the Tesla risk. And then the Enphase risk was it looks like about 100K, maybe like 110K. So 110K risk on Enphase, that was almost a double. And then the Tesla risk was about 50K, which was maybe, what is that, like a 70% or a 60%? That's pretty good. Let's freaking go. Let's get this thing to $3 million together. But anyway, I'm going to be looking for more trades today because I don't think trading's anywhere close to done today. So this is awesome. Somebody says, my hood calls up 100%. Is that the one from yesterday? Hood. Oh, let's freaking go. That's nice. That's nice. So I closed it. I did discuss the Salesforce drop, but Kenny, if you want to watch more about the Salesforce drop, I did a whole video on it on the main channel. So go to the main channel, just look at the AI bubble video. It's all about the Salesforce earnings call and everything. Big game changer. So Robinhood, yesterday I actually went for a call on Robinhood, but I was a little paper hander bitch. And so my call on Robinhood yesterday, dude, I bought this call on Robinhood. I'll show it to you right here. Look. This is where my alert was. 25, 26, 22 cents is where I went for a 21.50 call on Robinhood. Bro, 21.50 right now is double. I mean, you can't do the woulda, coulda, shoulda, I know. But even with the theta decay overnight, that's pretty impressive. But I didn't hold that one. So, okay, I'm going to be looking for more entries here. Dude, I freaking love trading, and it's like, it's whatever I could do to teach and give people insight. Obviously, can't guarantee future results, but past performance, since I've been trading here in March has been like, I'm like, a knock on wood, please don't end. This is fun. I really like this. So, okay. Please, trading gods. How do you pray to the trading gods? Like this or like this? Or like this? I don't know what it is, and I don't really care. Just let somebody tell me what I need to do. But anyway, so pending home sales come in negative 7.7%. Expectation was negative 1%. Pending home sales year over year 0.8 versus the negative 2.1 expected. So definitely a little bit of a slide there on the month over month. The revision's relatively nominal, but month over month slide on pending home sales. Not a surprise at all in this environment we're in right now. So good job, Hood. Wow, there it goes. It's going to 215. The problem is trend is your friend, and this is a pretty big downtrend. I think I have a fib here at 215 though. So watching Salesforce, SunPower, C3 AI 12%. Let's go. Neo. Ooh, Hims broke $20. Let's go. I was playing calls on this the other day. And yeah, nice breakout here. Good for them. Their balance sheet and their income statement, like from a fundamental POV, because I do fundamentals and trading, right? From fundamental POV, they're pretty good too. All right, what news do we have here? Let's look at the suits. Man, that was a fun day. Remember, folks, coupon expires Friday for the stocks and site group. That's tomorrow already. I can't believe it's Friday already tomorrow. Today is Rust Wipe Day already. What is going on with this week? It's crazy. Kevin slowly becoming a degenerate. You don't know me if you say that. You should have realized that like 10 years ago. Okay, I've only been on YouTube really for like 7 years, so. You should have known 7 years ago I was a D-gen. You're late. Jesus Lord. How much capital is needed to invest in Tesla call options? I mean, if you have to ask that question, you're probably not ready for options yet. But, you know, it depends what you get. I mean, if you go for an at-the-money call right here and you want to buy one option, it's $283 for one option. But remember, these are like, I call these exploding options. Like, because, you know, it's dead in like a day. Look, here, okay? This is a very important question. If A is for Apple and B is for banana, what's C for? It's a plastic explosive, okay? It's very simple. And so call options are kind of like C4, an explosive, like they're a ticking time bomb. So you have to be, especially on like these like one-day ones. Like the theta decay is huge. If you're not familiar with that, get familiar with theta decay. Get familiar with you know, options for sure, because they could absolutely destroy your account very, very quickly. So you have to be sort of limited and be careful. So anyway, NVIDIA gave up that all-time high right there. Somebody here says, Kevin, remember your broken headphones? I do. You know, those are the days. I know. Like, C4 is actually very stable. Yeah, I know, but that messes up the joke, okay? I can't do C is for nitroglycerin, which is less stable. Give me an old crusty stick of dynamite. Okay, maybe don't do that. But anyway, so wow, Tesla's now at 3%. Nice. Where's my re-entry chance? And then I'm watching Salesforce. Looks like it's trying to bottom at 217 there. Ooh, and then Robin the Hood's moving too. Anyway, let's look at some more news here. GDP weakness signals big rally ahead for treasuries. Let me see. Treasuries, bonds. Bond market right now on the 10-year. Oh, yeah, nice. Down 5.8 bips on the 10-year. Let's go. And CNBC finally put the 10-year back where it belongs. They had the 30-year there for a moment. I'm like, what are y'all doing? Anyway. Ubiquity's up. Walgreens Boot Alliance is up. This actually went from like a negative day after those Salesforce numbers to actually pretty decently positive day here. Not bad, especially on some of those IS stocks. Probably also because yields are coming down. So, not bad at all. Okay, cool. Let's listen in over here for a moment.
But we pay attention to the weaker.
Yes, Sarah, tell me what to pay attention to.
The number I'd pull out of this, because it was also very bond friendly,
out of
is
what?
the price deflator, moving lower to 3%. Versus the 3.1%, which was what is initially forecast and also initially reported. So, David, always good to get an inflation number that comes in worse than expected, but it's still not at the 2% where the Fed needs it to be.
Right.
And that's the thing.
Yeah. So, what does it all mean, Sarah?
Patience. They're going to have to wait a little more. It means that they're going to have to wait to see more evidence. I just showed jobless claims. They were a little elevated. Look, I'm really looking forward to a conversation today with John Williams, who's the New York Fed president at the Economic Club of New York.
Sarah's going to do it?
Speaking around noon. Market's going to be paying attention. He's always a big voice at the table and always gets a vote. Also, this is really the last major Fed speech before the blackout period begins, where they can't speak next week ahead of the meeting.
I didn't mean to put that up.
On the 12th. So I'm interested to hear if he echoes more of the Kashgari. We need months of data to show that inflation is really coming down before we cut rates, or a less hawkish view of we're getting there.
Somebody said, I remember when Kevin wrapped his car as an advertisement billboard for real estate. Heck yeah. I wonder if you could Google it. Me, Kevin, Prius. I wonder if there's a picture. Oh, yeah. Here it is. Look at this. Look at the Meet Kevin Prius. Check that out. Look at this. You know what's funny is like it evolved like this over time. It started kind of like, it didn't actually start like this. There was a worse version before. And this used to say professional real estate and property management services. And then I'm like, get rid of services and put Meet Kevin there. And then it evolved from this style into like, that was like the 2.0 version. 3.0 is right here. This is 3.0. And that was still my Prius. And then we did the same design on the Tesla, which that was sick. Like buying buying the Model X, my first like luxury car ever. That was a moment. It felt better, like bigger than even the plane. I don't know why. It was crazy. Oh, Summer, by the way, quick update on Summer. She's so cute yesterday. She's holding her head up. Finally, like she's stable to where she can like hold her head up herself, and you kind of just see her like look around, like a real little baby. Oh, it's so adorable. I'm so happy for her. Yeah, there you go. The good old real estate mobile, so to speak. Anyway, all right, give me some more, Sarah.
Soft landing remains the base case. Blackstone's COO yesterday. The Fed is having some success here, getting some more activity in CMBS, CRE spreads tightening. There's a lot of constructive commentary, the equity market this week notwithstanding.
I think and it comes down to the consumer. And on the consumer, I think what the read is, based on today's data, just going through some of the commentary, it's that the consumer's not cracking. Cruise not crack is what Goldman Sachs said. So still going strong, but a little bit of a moderation. And you see that from some of the commentary. I mean, we've got a lot of retail earnings to go through, and some are winners or some are losers. Here's the CFO of American Eagle, for instance.
Continued momentum similar to what we've been seeing.
Yeah, metkevin.com/Weeble for if you want to use Weeble.
Trends.
Paid sponsorship. Just like Coinbase, metkevin.com/Coinbase, you get up to $200 for signing up with Coinbase, also paid sponsor.
And then Best Buy, on the other hand, not as hot. If you look at what the Best Buy CEO said, they've been in a tough category of electronic spending post-COVID, coming out of COVID, but they say consumers continue to make tough choices with their budgets, trading down in some areas while still prioritizing spend in others like services and experiences like travel. This in combination with the pull forward of tech purchases that we did see in COVID continues to be a give back here for the likes of Best Buy, has weighed on demand into the early parts of the year in the pandemic, and lower levels of material innovation has led to continued lower demand for high-ticket consumer electronics and a focus on value and deals. So we're really starting to see winners and losers, as we have been,
all
by
along,
category.
There's been a bifurcation, as you've been doing this commentary, which I think is great and very informative throughout earnings season, but it's part of it you wonder is it just execution? Although, frankly, Best Buy actually executing fairly well despite what are somewhat negative comments in terms of the consumer.
No, but a good example of that is Capri, which owns Michael Kors, which had a weak quarter, versus a Tapestry, which had a strong quarter, and they're trying to buy them because of that weak execution. And here's what Capri says. Performance in the fourth quarter continued to be impacted by softening demand globally for fashion luxury goods. Didn't hear that at Ralph Lauren.
Right.
Didn't hear that at Tapestry. So you're right. It's not like if you're in one category necessarily, you're a winner.
Meantime, markets are under pressure. Once again, Dow's down 358. We've kind of talked about why. NASDAQ's coming off the worst day since the end of April, and the S&P is on pace to break a 5-week win streak. NASDAQ still up 8% for the month. S&P up more than 4%. Just 4 tech stocks have added more market value than the rest of the S&P put together. NVIDIA, Microsoft, Apple, and Alphabet have added $1.4 trillion this month, more than the other 296 stocks that rose put together. Half of the gain was NVIDIA. Let's talk more about where the market goes from here this morning. Charles Schwab, Chief Investment Strategist Lizanne Saunders is with us. Lizanne, good to see you.
Hi, Carl. Nice to see you, too.
There was some chatter when we crossed the 100th trading day of the year that when you get to that level and you're up 10% year to date, the year ends up historically being pretty good. Is that a reliable thing to count on?
I think none of those anecdotes are reliable on an every year basis. We also have to remember that you can look at those trends at the index level, but what's really noticeable this year is what's going on under the surface. In the case of the S&P 500, it's not as extreme, but you've had no more than, I think, a 7% drawdown at the index level, but the average member has had a drawdown of 14%. That average member drawdown goes up to negative 35% in the case of the NASDAQ. So I think the real story of what's going on is not necessarily being told at the index level because of that bias up the cap spectrum, the Fab 4 contribution. As you said, there's so much churn and rotation going on under the surface. I think that is telling the more accurate story of the relationship between the market and all of these macro uncertainties.
Right. Now, the question for a lot of desks this week is whether or not these drawdowns are calling into question the fundamental case of at or above trend GDP growth, positive EPS growth, and a paused Fed. Are you seeing those things getting called into question?
I think the sort of parlor game that's going on still with regard to the Fed and when will the first cut be, how many cuts this year, and that changes, of course, with every data point. But I think more important to the equity market broadly, but also specific to factor leadership, whether it's small caps getting a lift or getting hurt disproportionately, is yields. I think the bond market is really in the driver's seat for the equity market right now. Now, of course, there's a relationship between moves in yields and prospects for Fed policy. Those are connected, but it's that real direct inverse relationship between bond yields and equities, with the inverse relationship being much stronger as you go down the cap spectrum, because obviously there's greater interest rate sensitivity when you get into the smaller companies. And that's, I think, really where the leadership has been defined is based on what's happening in the bond market. And for the equity market, it's very specifically the 10-year yield.
Yeah, bonds and AI, that's the other biggie. We were just looking at some of the year-to-date winners for the S&P, Super Micro, NVIDIA, giant gains,
utilities.
More than 100%. Utilities. So do you buy the AI theme as a leadership for the market and a way to reevaluate how you think about earnings and productivity in companies?
Yeah, and I think it comes into play in what we think of as the growth trio of sectors, which house the Magnificent Seven. So technology, communication services, and consumer discretionary. But interestingly, although tech and communication services are still doing well, you've had that negative divergence in consumer discretionary, in part because that's not really the AI play necessarily, especially a stock like Tesla, which has been such a weak performer. I think AI is incredibly compelling as a driver of the economy, as a driver of productivity. I'm not sure you can quite quantify it yet in terms of things like productivity statistics, but certainly has represented a lot of power from an earnings perspective. And in the case of utilities, there's been a lot of chatter and stuff written about, is that an odd thing happening in a market that at the index level anyway is doing fairly well, that you've got this classically defensive area in this leadership position. But to your point, Sarah, I think the leadership of utilities has more to do with the sort of power story component of which is AI, more so than this traditional area of defense that investors are moving toward.
Yeah, the rewriting of utilities as a playbook is really interesting. One of the more interesting stories of the year. Lizanne, talk again soon. Thanks so much. Lizanne Saunders.
Good to see you.
Communication services, technology.
All right, let me try Doomberg. Nothing? Crypto update? That's it? What is this crap? This is some nonsense. All right. So now we're going to take a peek here. We got NVIDIA just turned slightly red. You have Tesla just rotated down a little bit. Look at this. You tried to play the breakout. You really tried to play the breakout. You went to 182. We were talking about that live, how that was potentially the place to be for Tesla 182. That's exactly where it went. And here we are, baby. Oh, and look at this, my friends. We are at the 215 line on Salesforce. That could be a big moment. We've also been talking about going down to that 215 line on Salesforce. I don't know if it'll hold. Then you've got NVIDIA. We've got NVIDIA here at 1149. That is off of its previous move here where we were sitting at 1155 for a hot minute. Enphase consolidated a little bit down to the right, sitting at 4% up. Tesla is still holding on to 3%. I don't know where it's getting this bizarro bounce from in this world here at 181.3, but whatever. A little bit of a bounce there. Then I've got, let's see here, Dell Technologies, consolidated at the bottom. Looks like 165 might be the bottom for Dell, at least for now, and stable here. And we'll see where we go from here. Robinhood still up almost 3%, pretty impressive. And then we've got Workday down 2%. Qs, they fell a little bit more there for a moment. Not great. C3AI is up 11. Not also great here. You've got UiPath down about 34%. And let's look at some other movers. Somebody says they're picking up Now, Service Now. I bet that's on sale today too. Oh yeah, ServiceNow's down 9%. Yeah, you're getting a consolidation here. It feels like you're creating a bottom today, or at least at this time. No guarantees though. I mean, these bottoms can break out really fast to the downside. Nobody knows. You got NVIDIA that's a little stuck in the mud there, and Supermicro at 167. Enphase a little sideways. Tesla's the early morning momentum, like this ride right here. This was amazing. This was a crazy, crazy run. I always get that feeling of like, oh, if I held a little longer, I would have made more money. But you have to identify that, and then you have to crush it. Because quite frankly, I think we did really, really well there in the AM. The realized P&L here sitting at 116 in 20 minutes or whatever on a bet that was like $150,000. That's pretty good. So maybe we can buy a Mai Tai today. I don't know. We'll see. It is. Oh no, tomorrow's date night. Yes. So is it? Oh no, maybe it is. No, I don't know if it's almost impossible to do date nights when you have so many children. Whose idea was this? I don't know. Anyway, okay. So let me see what other news there is. Month-end rebalancing signals seem to work. Okay, Euro stays lower. Blah, blah, blah. This is boring. Okay. What else here? We've got economic calendar. We talked about PCE tomorrow. I posted that on eHack in terms of what expectations you should have. Talked about the Tesla news. Salesforce, we made the whole AI video on. My favorite thing is when people are like, oh, artificial intelligence is not a bubble, Kevin. Like, the more, usually it's like the quantity. The more people are like, it's not a bubble, the more you know it's a bubble. It's one of those contra indicators. Bro, look at that perfect bounce. I don't know how long that'll hold, but perfect bounce on Salesforce. I had no idea if it was actually going to end up holding, and it did. Oh, let's frickin' go. That's crazy. So, hey, look, like I said, if you just want my trade ideas, I don't recommend people copy my trades. I can't guarantee you'll make money, but you want my trade ideas. The P&L's been frickin' sick, since I really started trading over the last 3 months. We're now at a realized P&L. This was like a $900,000 account. The realized P&L right now is 1.28. So let's freaking go. Let's keep it going. But all I do is I look for trends like that, and I'm like, hey, I'm going to watch this. I think I'm going to go in. And then if I go in, I'm like, here's my alert. Here's what I bought. Here's my position. Sometimes I'm like, this is like, I think I'm going to sell it really quickly. I think I'm going to hold it. Whatever. It's sort of just like variable. And obviously, can't use past performance to predict future results. But anyway, coupon code for that expires tomorrow at meetkevin.com. Yeah, Tesla's getting, I don't like this no man's land, by the way. I generally do not trade no man's lands. And this is a little bit in a no man's land here, so I'm probably gonna watch Tesla move down to about 179 here, is probably where I'm gonna watch Tesla go to. If not 178. You got a little bit of the NVIDIA drawdown. You got the consolidate. This is more of a bleed down, frankly, here on Enphase, and then you have this recovery forming on Salesforce. I don't know how long it'll last, but that's a solid bounce there at 215. Dell is also recovering, which is a good sign that some of those sell-offs have bottomed. You could see that bottom on UiPath as well, although it bottomed earlier at about 1181, and it hasn't gotten worse, which is a good thing if you're trying to buy the dip on some of the positions that have sold off, because maybe you're actually at a bottom there, right? Obviously, no guarantees, nobody knows. Let's look at Faraday Futures quickly. Faraday Futures 41%, also moved off that 44-ish line. Pretty crazy. All right, folks. I think it's honestly time to push the button. So here we go.
Just close the fucking door. Close the door.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Here we go. Time to get some coffee. Your boy's on like 4 hours of sleep. It's time for more coffee. All right, folks. We'll see you in the course member live stream soon. All right, thanks, folks. Kevin, please start a short-term trading fund we can invest in. Those are called hedge funds. Could make a hedge fund. Problem with a hedge fund is you can only have like 100 investors, and they have to be accredited. They always take the good stuff away from the retail, huh? I get it. You know, the SEC is looking out for retail, and but whatever. Anyway, thank you. Email us at staff@mekevin.com. Seriously, if you have any questions, we'll make sure you get taken care of today. Or if you want to bundle up between the event we're doing in Vegas next month, it's June 21st to 23rd. You can bundle up a course in the event. Or a lot of people are doing either the Stocks and Psych bundle with Zero to Millionaire Real Estate Investing or the Entrepreneur bundle with Stocks and Psych. That's like the wealth plan, or sorry, the gold course with AI and stuff like that, efficiency and all that. I'm buying the course. Screw it. Been watching you 5 years now. May as well. Well, I thank you. I really appreciate you and your support for 5 years. 5 years? Dang, man, that's 2019. Thank you. Really appreciate it. Y'all make me so happy. I know sometimes they're the haters, and the haters, they have a job to do. All they do is hate. But sometimes that can get to you. But then they're always nice folks like you to make up for it. I posted this yesterday on Twitter, X, whatever, if you didn't see it yet. In 2012, someone did this to my for sale sign. My income that year was $53,000. I always had haters. Nothing's changed. And so somebody's like, hey, you should make that your profile picture. So there you go. See y'all. Bye.